Well, one of the most epic and wild short squeezes just took place on Tesla, and it's possible that Donald Trump has a lot to do with it. But before we talk about Donald Trump, it's worth noting that a Bloomberg Intelligence had a piece out on Tesla today that is incredibly bullish. Their title is literally, Tesla's battery side hustle may contribute to 20% of 2025 earnings. Now, many of us who have been watching the energy business of Tesla grow already expect that Tesla earnings are going to explode when it comes to batteries. And we actually think, it's worth noting when I say we now, at this point, I'm just referring to me and the team over here. We kind of think that Donald Trump isn't going to remove a lot of those manufacturing tax credits on batteries or electric vehicles. If he does, that would be a net bad for Tesla. But given how close Donald Trump is now working with Elon, we don't actually think that's going to happen. Now, Elon Musk has said, losing our tax credits wouldn't be bad for Tesla. It would just be bad for our competition. I don't believe in that argument. I think the competition is already struggling enough. And quite frankly, while they're drowning, you don't need to put your boot over their head. The Fords, the GMs, Rivians, Lucid, they're just not making money the way Tesla is, if at all. They're not. So with that, I'm not extremely enthused about the competition and saying losing tax credits supports Tesla. But let's ignore the tax credits and Donald Trump for a moment, and let's just talk about this Bloomberg Intelligence piece, and then we'll circle back Thacky to it. Tesla's energy business, its energy storage business, is poised to diversify the car maker's earnings beyond auto sales, contributing almost 20% of 2025's earnings, up from 9% this year. That's like 2.5x. That's pretty impressive. The unit's demand pipeline is robust. Those are buyers who are affected by tax credits. One of the reasons they buy megapacks and batteries is because the buyer gets to write off like 30%, including businesses or individuals or whatever. And if you're the manufacturer, you also get another like 10 to 15%, okay? It's like tax credits on both ends. It's a great steal. Anyway, it's all thanks to the Inflation Reduction Act. You know, people say that Republicans want to get rid of that sort of spending. But the problem is when you get rid of that sort of spending, you're really raising taxes. And Republicans don't want to raise taxes. You know, like who wants to say, oh, thanks to Republicans, a new Tesla's now going to cost you $7,500 more. It's not going to happen. But anyway, with the scale and cost help from this newly added Shanghai Megapack factory, which doubles production capacity, the business's net present value, so value today, could be worth about $52 per share, which is actually really bullish for Tesla stock. Tesla's energy storage unit could grow to about $14.3 billion in 2025, driven by expanded capacity at the Shanghai Megapack plant. That's almost double the capacity of Lathrop, which is quite frankly amazing. And on their net present value, they sort of give a little cash flow statement here. They run it all the way. They run their model all the way through the end of 2026. And by the end of 2026, they see gross profit coming from the energy business alone of close to $8 billion, which is really good. You know, take 15% off. Let's see, they owe 7778. Take 15% off. Take about 1.1 billion off for operating expenses. You're actually doing pretty well. Now, what I'm going to do is I'm going to compare that Bloomberg estimate to my 2026 numbers on my spreadsheet just to see where we sit with energy. So my spreadsheet is right here. They see total energy revenue at $26 billion, and I've got total energy revenue at $18 billion. Okay, so this had the end of 2028 reasonable price target at $248. This was based on automotive gross margin, I'm pretty sure. Let's just verify. And an automotive PEG, that is. PE ratio is, 50. Okay, 50 is about 32 times 1.67. This is based on a manufacturer's PEG. We'll talk software in just a moment. So 248. If I change this to Bloomberg's estimate for the end of 2026 to $26 million, that's going to add $8 billion. I'll be clear, that's billion, not million. Okay, cool. That adds about an additional $24 to my stock valuation at the Bloomberg estimate. And if I now take the software margin, which I don't think that Tesla really should be selling or trading for right now, but if I do it, I'll take this PE ratio, and what we'll do is we'll do 32% growth times 2.67 for software margins. Puts me at about an 85 multiple. Can get to about $463 justifiably on a software level valuations. I don't think we should do that. I think we should stick with manufacturer valuations. 272 by the end of 2026. And let's compare margins for a moment. My expenses bring us to about 18 billion, which leaves us about 18 minus 26 would be about $8 billion of gross profit. Hey, that's what they have too, $8 billion of gross profit. Fan-freaking-tastic. We are in alignment. Okay, so this is pretty good. It's pretty good. Now, obviously, the stock today had an insane short squeeze. One of the reasons it had an insane short squeeze was because apparently Elon Musk got on a phone call with Donald Trump and Zelensky, which implies a significantly closer partnership that Donald Trump is now forging with Elon Musk than has ever existed before, which is a complete game changer for Elon's input into government. And this is what a lot of people are pricing in right now with speculation really on Tesla. Now, I made money trading Tesla today too, and I was sending alerts to Stocks and Psychology of Money course members. I'm like, hey, this is, play it like this, or whatever. Hey everyone, thank you so much for we were doing pretty good there on some of these trades. Of what I was trading, I had roughly a double on my trade. So if you want to be part of that, make sure you join to the stocks or join the Stocks and Psych course over at meetkevin.com. Keep in mind that's different from the free alpha report you can get every morning. You can get that Stocks and Psych group by going over to meetkevin.com and clicking on Stocks and Psych. It gives you lifetime access to my trade alerts. That's different from the alpha report, which gives sort of a report on ideas, resistance lines to watch. You can opt into that totally for free over at meetkevin.com/alpha. That's your morning alpha report. But the actual trades, that's in the Stocks and Psych group. Feel free to check that out. So let's now understand for a moment that Tesla trading at 272, or with this valuation here of 272, with this increase from energy, is obviously at the moment at 321, trading for a little bit of a rich valuation relative to that. And a lot of that is because of his short squeeze. This morning we broke 295. That was our really strong support line. Once we broke above that, we cleared the order book at 300, then 310, then 320. It was actually a remarkable movement. If you watched us live in the Market Open live stream this morning, you saw that play out. But let's understand that there are some risk factors here. Currently, according to Bloomberg Intel, the car maker trades for about 92.2 times on a forward PE basis. That's definitely rich, and that's something to keep in mind, which suggests that it's possible Tesla's going through one of those periods or cycles where it basically just moons, which is really awesome. And I'm making money from it too. It's fantastic. But it probably won't last at these high valuations, especially if we do end up losing some of those tax credits, which would be punitive to jobs as well. I personally don't think that Donald Trump is going to remove the electric vehicle tax credits. I think he'll remove the electric vehicle mandate, the 2035, everything must be electric. I think that'll go away. But I don't think the $7,500 will go away. I don't think the solar or battery manufacturing tax credits will go away. And so that does make me bullish on Tesla long term, just not at a long-term entry price for today's valuation. Again, if I take 320, I divide it by $2.43. Yeah, I'm trading at about $131, which is a little richer than even what Bloomberg Intel there mentioned. They suggest 92. Either number you take and you assume the company's expected to grow earnings per share by about 32% per year. It's trading for about a 3 peg. which is rich even for a software valuation today, which usually trades at about a 2.67 peg. And we're not quite at regulation approval yet. And not just even that. Even if Donald Trump was like, yeah, Elon, go do whatever you want, we don't yet have the technology to make sure FSD is 100% on its own. It's probably going to be years of testing and piloting first before we go mass market. Now, that said, big fan of Tesla long term, and I do think there'll be better entries in the future, but this short squeeze is phenomenal. And I'm a big fan of looking at this and saying, all right, what's our historic volatility and how do you play this? So right now, historic volatility, 2 days ago, I sent out an alert, or it was 2 or 3 days ago, I sent out an alert that historic volatility was basically at all-time highs, and it might be worth selling options on it. Some people might consider selling puts if they think the valuation is going to keep going up. Some like to sell calls if they don't want to sell the stock, but they want to potentially hold on to some underlying. At $320 per share, it's probably getting increasingly desirable to consider selling some calls. Now, I don't think, like, let's say you have 1,000 Tesla shares, okay? That would be worth about $320,000. So let's say you have 1,000 Tesla shares. I don't think that you necessarily should, and this isn't personalized advice for you, it's just an idea, sell calls against all of that. But let's say you sold calls against a portion of that at this valuation. That way you could still participate basically in some upside, right? So let's go out to right before we get the jobs data for January, which would be January 17th. So we'll go ahead and jump over here to Webull, go to January 17th, and we're going to go calls. We're going to look Jan 17th. Just go, you know what, you could probably go a little bit out of the money. Go here, sell the 330s as an example, okay? So 330 mid price is going to net you about $28.65. These numbers will obviously change on Monday. But $28.65 on a 330 call, that gets you about 8.6%. So think about this for a moment, which I think is very interesting. You have, let's say, $320,000 in Tesla because you have 1K Tesla shares, right? 1,000 shares. Okay. Now, if you sell calls at 330 on half, you'll sell 5 contracts, which would be 500 shares worth. Okay. 5 contracts are going to get you approximately times 100. They'll get you about $14,325, which on about half of what you have there is on 160, right? Half of 320 is 160. Divided by 160, that gets you an immediate return of about 8.9% on the half that you sold. And since you're not going to get sold out until the stock is trading for at least 330, you actually have another $8 of upside on that. From closing price actually closer to about $9. So 9 divided by 330 gets you another 2.7%. So basically, if you sell the 330 call, you're probably sitting around an 11.6% additional return on your $320 or on your $160,000 that you're selling calls against. Now, obviously, if it ends up running and it runs up to, I think your break even at this case, well, let's just add it in, 28.65 plus 330. Break even would be somewhere around 358. Obviously, if it sells for more than 358 in the future, you would have been better off holding onto the shares. But if it ends up going down from 320 and I don't know, we get a CPI or PPI report or something that just spooks markets or the shorts reload their shorts, right? Whatever it is. And the stock goes back down to 295. Well, now you could potentially realize a lot of the gain on that option by selling that option and just not holding it to expiration. Usually when I get about 50% of my profit on an option, I'll close it out when I'm selling options. And with volatility as high as it is, I don't think it makes a lot of sense not to at least consider selling some options against the position. Anyway, those are just some maybe management thoughts that I have in terms of diversification, because then what you could do is you could diversify. You could diversify away if you wanted to. Maybe you don't want to at this point, and you don't have to, which is the good news. The other thing that's really good news as well that I think is supportive of Tesla is I do think that Jerome Powell put a floor on bond yields. I'm sorry, not a floor, a ceiling on bond yields and a floor on bond prices. I think that Jerome Powell made it clear that inflation is no longer an issue, and it's not an issue that we should worry about going forward, which means this might be the top for yields, which would be about 4.4%. Does create a desirable opportunity to buy treasury bonds and maybe pick up on that capital appreciation as those yields come back down. But it's also beneficial for Tesla as a Tesla investor, because the more yields come down, the less Tesla has to spend on interest rate buy downs, which is beneficial to Tesla's margins. So congratulations to everybody in the Tesla community. This is fantastic. And just keep in mind that the stretch we're getting on valuation right now is heavily built on things that have not come to fruition yet. And there is risk associated with that. Warren Buffett generally says he likes pricing based off cash flow and current valuations and current revenues, not based on potential future growth, because it prices in hope, and that can be hard to value. Some things that, in my opinion, are priced into today's valuation. I think, well, first of all, let's go over to my sheet and I'll tell you. I think that I would probably want at least a 6% rate of return over the next 2 years to invest in Tesla. So I really need to be at a 1.6 for a manufacturer, 1.67 PEG. And then I want to be at a discount of this by 2 years compounded. So that means my buy would have to be at rate of return over X years, over 2 years. So probably under, yeah, probably back under 250, yeah, 240. Probably, yeah, there it is. Under 240 becomes a little bit more desirable. But frankly, even at these levels, if we have a trend that moves us under 295 and towards that 240 direction, you're probably in some kind of fear environment that would enable you to buy the stock for even less. Right now, there's almost no fear for Tesla. I mean, think about it. No fear for Tesla. Why? Markets are not considering a recession right now. Markets are considering the best for Trump plus Elon. Markets are not considering the damage of losing tax credits, although I don't think that's going to happen, so I'm going to put less of an issue. And then, of course, markets are valuing the company above the value of a high-margin software company. And while it does have high-margin software, a la FSD, you know, most of its revenue comes from actually selling goods, you know, vehicles and mega packs and otherwise. So it should be selling for closer to that 1.67 peg. And again, using these higher levels over here and 18% gross margins, with the revenues that Bloomberg is projecting on energy, which is a good boost, probably want to be looking at buys of under 240. And if you want to get a fear-based buy, you're probably looking at, if you break 295 and 260, technically, on technical analysis basis, you'll be around 220. If you break that, you'll be back down to about 195 to 170. 195 to 170 is probably where you back up the truck, right? So under 170, 195, more of a back up the truck with these exciting sort of with new battery forecasts. So great company overall. Fantastic. This Bloomberg forecast, in my opinion, does increase the valuation of Tesla. The last time we did this, we were probably about $40 or $50 lower on both of these. So that would have put us somewhere around, 140 to 190 in that range. And now we're probably closer to that 170, 195-ish, maybe even low twos. That battery forecast is a bullish game changer. So, great news for Tesla. Does it justify where the valuation sits today? No, it does not. But go ahead and check out meetkevin.com to get the free alpha report. If you want the actual trade alerts, make sure you join Stocks and Psychology of Money. You can see what I'm playing when it's options or long purchases or whatever it might be that I consider a trend alert that I sent to you. Check it out. Go to meetkevin.com. Thank you so very much for being here. And folks, we'll see you in the very next one. Goodbye and good luck.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.